Hi guys, I'm Tyler Laundon, the Chief Analyst of Cabot, Small Cap Confidential and Cabot Early Opportunities, here with your Cabot Weekly Review. It is Friday, February 23rd. It's right around 1:30 p.m. Eastern Time, a little bit later than we typically do this. But a couple of things going on this morning, including a neighbor who is taking down trees and running a wood chipper. So that was just too disruptive to do a video with that going in the background. But better late than never, as they say, and here we are. Market is still up on the day, which is how it started. So the cadence of the week, of course, Monday was a holiday, so the market was closed. Tuesday, Wednesday, not really great days in the market, though definitely not horrible by any stretch of the imagination. Just some questioning about some of the market big picture tailwinds, including AI and how far that could really run. Then we get into Wednesday night, NVDA comes out with their report. The market steps up in a big way yesterday, and here we are today. So let's talk a little bit about that. So NVIDIA, of course, big earnings report of the week, huge AI theme around that stock. The company beat and raised against, really, really high expectations. So it added about $275 billion in market cap. Market cap soared over $2 trillion. Management also talked about how accelerating computing and generative AI have hit a tipping point. So a lot of bullish commentary there, which definitely helped the semiconductor space and then a lot of technology stocks as well. So that's that. Here's the NASDAQ. About flat on the day, but similar to the S&P 500, got a bit of a boost after being generally weaker in the beginning days of the week. And then small caps, which had led last week, leading being a relative thing because obviously this chart is not nearly as nice as the last two. And then this week, a bit of a laggard, I think. Despite lagging this week, a lot of money has been flowing into small caps. So Bank of America was out talking about how in the last week it's been the biggest weekly inflow since June of 2022. So I continue to think that small caps have a pretty compelling setup if you can look out a couple of years. Of course, they just don't have that exposure to the mega cap tech stocks for obvious reasons, being a small cap index. But there's a lot going on in small cap land that is pretty interesting. We're not going to go deep into that today. Turning to rates. So rates have been moving up a little bit. Here we have the chart, the 10-year yield, which is at 4.25% right now. So as you can see, the trend was up a little bit. It's down today. But because of that, mortgage rates have been going up. So they're back above 7% for the first time since December. Other stuff, macro, FOMC minutes came out this week and a number of Fed speakers spoke. Still, the theme there is everybody's supportive of an eventual pivot, but they are repeating that need to be patient theme. There's really just no urgency to start slashing rates right now. They want to see that the downward trend in inflation is continuing. So Goldman was out talking about how they see the first cut in June with 100 basis points in cuts throughout the year. I looked at the market odds just before doing this video, and they pretty much line up with what Goldman is saying. 52% of a probability of the first rate cut in June. When I did last week's video, I talked about how the S&P 500 was pushing up against analyst targets for the year. Easy solution to that, just have analysts raise targets, right? Well, Goldman was out doing that a few days ago. They bumped up their target to 5,200. Again, that's for the S&P 500 for the end of the year. Sounds good, but of course that's only about 100 points higher than where we are now. So take that at face value. In order for analysts to continue to raise year-end targets, I think we're definitely going to need to see interest rates come down and follow through with AI-themed stocks, economic growth, margin protection, productivity, all those kinds of big picture drivers. And then, of course, we're going to get into the election toward the end of the year, and who knows what's going to happen with that. But anyway, that's too far off to worry about right now. As far as stocks this week, so last week I covered a whole range of stocks in different markets and different market indices. This week, a little bit more of a targeted focus. Just want to go a little bit deeper into three stocks. So I have two that their charts aren't going ballistic like a lot of stocks. I think a lot of us are out there looking for new names to add to our portfolios that haven't gone completely crazy, because we don't want to have that downside risk if things kind of fall apart, but are looking for compelling stories with generally good looking stock charts. So I have a few of those, and then I do have a stock that is that has gone a little bit vertical lately, but I'll talk about why that is. First up, let's talk about Wix.com. So market cap of 7.7 billion, ticker symbol is WIX. So you may have heard of this company. They have a software platform for websites and e-commerce management. So it's doing relatively well, but I think that, reading through analyst notes on Wix, what analysts are looking for to get really bullish is just a little bit stronger economy, so that small businesses and even individual content creators might be more likely to make a purchase. So that's upside if you think that economy situation is going to play out. If you think it's not, then you're probably not too interested in this one. But if we go back to earnings, which were a few days ago, good fourth quarter results, in line on revenue, ahead of expectations on free cash flow, and then management guidance for 2024 matched consensus. There was a little softness in bookings in the quarter, but management did talk about how they expect that to reaccelerate this year, especially in the back half. There's a lot going on with respect to new products like Wix Studio. I talked about individual content creators. So if that's something that you're kind of interested in, just do a Google search on Wix Studio and see what you have, see what you pull up there. Company also appears to have some pricing power, given that some of their prices are going to go up for some of their services soon. Stock does trade at a premium valuation, and there were no huge price target increases from analysts. Like I said, they are generally positive on the stock, but it hasn't gone parabolic, and it's not one of these it's going to the moon like SMCI or some of these other real high flyers lately, which I think makes it compelling. All right, next up is Intap. Ticker symbol is INTA. Market cap here is just under 3 billion. It's a software company, has solutions for professional and financial services markets. So they reported a couple of weeks ago, as you can see here, where the crosshairs are. The stock was down that day, but there's really no big issues with the story. Fundamentally, the story is good. Revenue and earnings beat expectations. Profit margins grew, partially due to a higher mix of cloud business and lower professional services. It's hard to talk quickly about that, but if you get into the transcript and what management talked about, a little bit of a tweak to their business model. They're going to be leaning more on partners for implementations, which means that professional services line is going to come down. The upside, the revenue line from that will come down. The upside is that margins should go up. It also frees up some internal resources to focus more on growth initiatives. So on that note, the company just held its first investor day this week. They talked about doubling down on AI, both in existing products as well as new ones. They announced a new product, Intap Assist, and they also announced the acquisition of a German company, Delphi, I believe I'm pronouncing that correctly, which uses AI to speed up data collection and analysis from across public data sources. So Intap is out with a new branding message. Now, intelligence applied is what they're going with. So sort of a tighter focus, a little tweak to the business model there that should increase profit margins, and that's Intap. And last but not least, so this is the stock that I referenced that the chart has gone a little bit parabolic lately. This is a biotech. I think I mentioned last week that I've been following a number of biotech stocks. It's an improving area of the market, and there's a lot of individual names with exciting things going on. So this is Ocular Therapeutics. Ticker symbol is OCUL. and the market cap is 750 billion. I'm sorry, 750 million. As with any small company in biotech in particular, you're definitely going to want to do your own research before you jump into this. But it's caught my eye lately. They are developing extended release therapies for ophthalmic indications. They do have one approved product, and now they're getting close. They have another one in phase 3 that is showing potential in wet age-related macular degeneration, which has apparently the potential to be pretty transformative in that space. So this week, when you see here on the chart where the stock price jump was on Thursday, so they had just announced a change to their board of directors and senior management team. They also talked about a $325 million private placement. So that's going to help extend that clinical development plan for that phase 3 drug candidate. And then also they pre-released Q4 results. The official results aren't due out for another couple of weeks. So we couldn't get like into the nitty gritty of that. But of course, there's a lot going on here with the drug development schedule and like when this phase 3 trial could end. So like I said, you want to do your own research on this one. But I wanted to throw it in there because I think biotech is a pretty exciting space and a lot of these stocks are moving. So, all right, guys, that is going to do it for this week. I hope you have a nice weekend, and we will be back in touch next week. Take care.